Hey MCE crew, the unrealized capital gains tax is back on the docket. This is the tax that is actually going to hit you potentially, even if you don't get any money, okay, quite frankly. So you didn't realize any income, but you're getting taxed for it. That's what the unrealized capital gains tax is all about. I'm multitasking. I'm in the car because my wife said she wanted to go to the grocery store and she wanted me to drive her. So here I am. But I got to get this video out to you guys. Now, someone said that when I'm in the car doing a video, I look like a conspiracy theorist. However, this is no conspiracy. Coming at you from the National Review. Taxing unrealized capital gains, a bad idea that just won't die. Vampires are, so the story goes, extremely difficult to kill. And so it's somehow appropriate that the same is true, but in reality, predatory tax proposals. President Biden expressed support for a proposal under consideration in the Senate to place an annual income tax on billionaires' unrealized capital gains. That's how it starts. Starts with the billionaires. And then once they realize they don't have enough billionaires to really make the money that they want, then they start to bring it down to the millionaires, and in 5 years, it'll hit you and me. The potential tax increase being pursued by Senate Finance Chairman Ron Wyden, Democrat from Oregon, would be among a number of tax provisions that Mr. Biden is seeking to pay for a proposed $3.5 trillion spending plan that encapsulates much of his first-term agenda. It is an alternative to some administration tax ideas that have flopped in Congress, and it would generate money from the wealthiest sliver, operative word, of Americans whose incomes can be a fraction of their wealth. Okay, and listen, what this is going to do, we've talked about both subjects on a channel before. We've talked about Janet Yellen. She was the first to come out and suggest this. Now the Senate is running with it. And now here's where it's going to hit the middle class hard, because they are going to move this down into the middle class income level sooner or later. But what happens with the wealthy, they can actually take their wealth and use it as collateral for loans that will minimize their tax debt. This is a way that they're trying to get around that, apparently. It is not unknown for a tax to begin life by being levied on, quote, the wealthiest sliver of Americans, unquote, but over time for it to catch more and more people in its web. And this is the first time I'm reading this. I just said that. As I wrote, the author wrote, in March in response to a wealth tax proposed by, surprise, Elizabeth Warren. When a permanent income tax is introduced after the passing of the 16th Amendment, there were not many victims, okay? And they didn't suffer much. Less than 1% of the population paid income taxes at the rate of only 1% of net income. I understand that changed. So yes, you see how history proves that these taxes start out targeting one group, the wealthy. That's to get you to accept it. Because the wealthy are evil, right? Even though they own the company that you work for and they pay you every 2 weeks, they're evil. So stick it to them. And then like a Trojan horse, you, at the end of the day, not you, not the viewers of Money Changes Everything, but the general public then finds themselves under siege from that same type of taxation. So what you've got to do is become a lot more politically savvy. I was talking to someone the other day who is an investor, and they were talking about politics in relation to their emotions. And they were saying that how one group, specifically the Democrats care about people, and I got to give it to them. They brand themselves that way, and they do a very effective job of appealing to the emotions. So bravo to them for that. But the proof is in the pudding, and I'm from Baltimore City. And I can tell you that ever since I've known how to spell politics, that city has been run lock, stock, and barrel by Democrats. And it has gradually declined. That decline has been accelerating as of late because Democrats tend not to understand how the economy works. And if you want to increase tax revenues, then what you have to do is leave the tax laws alone and go about the process of creating more opportunity for people to start businesses. That will increase employment, and that balloon will just blow up greater and greater and greater. That is a very positive way to increase your economy and your tax receipts. It's a very deleterious and backward thinking way to try to do that just by saying, I'm going to raise taxes. Okay, that's really all one group ever has to say in terms of raising revenues is we're going to raise taxes. We're going to hit the people. Okay, and again, don't let them fool you with that millionaire and billionaire crap. Notice how Bernie Sanders used to talk about millionaires and billionaires. Now he only talks about billionaires. It's because he is now a millionaire. In America, this is how prosperous America is. That someone who is a self-avowed socialist can still get filthy rich. All right, there are plenty of other objections to taxing unrealized capital gains, and writing back in 2019, David Bashan responded to an earlier, broader millionaires and billionaires were to be targeted, Wyden proposal with a thorough demolition here. He said a wealth tax is a sophisticated, lighter touch derivative of feudalism, but the core of it is the same. The state, i.e. the king, has theoretically a call on everything you own. So look out for that tax. It's going to eventually hurt your wealth generating ability. So for now, continue to purchase assets. Definitely minimize your absorption of liabilities, because they're taking money out of your pocket. And the more money you have, the more control you have. So even if these guys decide they want to institute capital gains tax, an unrealized capital gains tax, then you're going to be able to maneuver a lot better if you got the money, because at the end of the day, the billionaire class is going to potentially impact the middle class by stopping or slowing investment. If their investments are being attacked, they're going to either slow those investments, or they're going to look for other opportunities to invest, like we always talk about it here, insurance policies. Okay, they can put their wealth over in that and avoid taxes in 3 different ways. And if they're not putting that money into investment, then jobs are not being created, opportunity is not being created, and the economy is not growing for you. Okay, so this is another in a long line of bad ideas. All we hear is bad ideas in terms of how to maintain a strong and vibrant economy. But I want you to just continue to buy assets, do your due diligence, and also look for ways to save on taxes. We've talked about that in plenty of different ways here on the channel. Okay, listen, let me end with this. I want to say that we're going to reach out to people again. If you are losing your job because of certain things that are happening in the world today and in the nation, then I would encourage you to consider another opportunity. Start a business in the financial services or real estate industries, and we can help you with that. We can talk to you about it and give you the straight skinny on how to start a successful business in these 2 industries we've been involved in for 20 years now. Hit us up at mcenow.com. You can send us a message through that, and we will respond expeditiously. All right, guys. I think my wife is going to be coming out of the grocery store here soon. I'm going to go home, and she's going to cook something for us to eat. I hope you all have a great evening, and I will talk to you soon.